See, in Crisp Idea, so we have two verticals here. We cater B2B with institutional clients, and we cater B2C with retail investors.
Yeah.
So we see a lot of, opportunities here where we are trying to bring that institutional research capabilities and providing it to our retail investors. And this is more or less because of the AI. The work has become easier, it's becoming faster. So 10 of hundreds of pages are converting into 1 or 2 pages or so. So there is a lot of change that has come, and it is helping us.
Hi everyone, welcome to Gupshup at Clear Trust with Kabir. Today we have Sejal Jain with us. Welcome to the podcast today.
Thank you.
How are you doing, Sejal?
I'm doing good.
Sejal, for the viewers who don't know much about you, could you give us a brief intro about yourself, about your journey?
Hi, thank you for having me, and this is Sejal. I'm founder and CEO of Crisp Idea. Coming from a Gujarati business background, finance comes very naturally as we used to have it as a business, as a dinner table conversation.
Yeah.
And getting that in family background and completing my post-graduation with in finance major with NMIMS, as well as having done my post-graduation in communications from UT Dallas US. I'm here sitting in front of you.
That's great, Sejal. Could you tell us a bit about what is Crisp Idea and how did it come into evolution, or like?
So after having a formal education, I came across two challenges in the finance field.
Yeah.
One, I faced a lot of bias as well as misinterpretation in the finance sector.
Okay.
So we saw specifically related to research.
Yeah.
So we saw that from an institutional perspective, a lot of investment banking and brokerage houses, they used to subsidize research in order to get more from their investment banking or the brokerage they used to get as a revenue.
Yeah.
Similarly, I saw that even in the retail space, a lot of research was misused, by just providing a tip and not using it as a sound investment.
Yeah.
So that's where I saw these were the two loopholes or the challenges which actually investors were facing to get a good value out of their investments.
Oh.
And that's where Crisp Idea was formed, where I did not want it to leverage it as a subsidized thing which was going on in the market, but creating a research firm as a boutique research firm itself, which focuses only on research and provides a real investment advisory to the investors from which they can, get value out of their investments and create wealth out of it.
That's pretty awesome about Crisp Idea. Could you tell us more about how long has it been for you, since you founded, and how big of a team is it now?
So currently we are a team of 12. I founded it in 2007.
Oh wow.
In 2008, I collaborated with Refinitiv, which is London Stock Exchange Group right now. We started providing them research equity reports.
Wow.
And currently we have also collaborated with S&P and Factset, which is so we are interacting currently with the three major platforms of the finance world. When I say we are sitting with a team of analysts here, the expertise of these analysts are so good. Like, though they are sitting in a corner of Indiranagar, Bangalore, they can still make a lot of difference in their opinions and the advice that they give, which can actually move the sentiments and the recommendations equivalent to those analysts of Goldman Sachs and JP Morgan.
It's just about that sound investment, like sound research in a way that you guys are providing. That is making the cut over here, I believe. So Sejal, you're telling us about your team of 12 analysts giving a tough competition to those 11, 12 guys at Goldman Sachs who are providing the same analysis or who are analyzing the same report as you guys. And so all in this analysis or research, how do you leverage AI and what has been the journey for you in this? Like, you have been in this sector for the last 17 years now.
So in past 15 years, we have seen a tremendous change in AI, and it has been in the waves. So we can say the first wave is of hyper automation, where we used to manually, prepare financial statements, and with this hyper automation, we started converting our Excel models, which has 130,000 data points, into 30 seconds with the help of AI.
Okay.
The second wave I see of an unstructured data, where transcripts, SEC filings, annual reports, investor calls, everything was unstructured. So the wave came where it all started getting structured with the help of AI.
Okay.
Thirdly, I saw there was also alternate data that has started coming in. That was another
What was that?
way of analyzing. Again, it's like by analyzing the oil reserve, you come to know how much is the supply of oil.
Like they said, like analyzing the Walmart parking
Exactly.
lot to analyze the demand.
Yes. So on that basis, we will come to know what will be the future price of oil. So that's where again the AI is grabbing the data as an alternate data source.
Okay.
Currently, what is happening in AI is, over and above all this, is summarization of data and sentiment analysis.
Okay, so to summarize all this, like first was like researching the large data sets, second was structuring the large data sets, third is now summarizing those large data sets, and fourth is like the sentimental analysis of those.
Exactly. So
in a way,
whatever was coming in tens of hundreds of pages is now converted into 1 or 2 pages. So that's where the help comes in. And that's where the AI is helping us out in understanding the management quality as well. As well as the company performance, and also helping us in forecasting the future of the company with the help of valuations or whatever target price we are going to give, or whatever recommendation of buy, sell, hold we are going to give. So the task becomes very easy. But again, it is also a challenge because you can't completely rely on AI.
That was what I was coming to. In this whole like sentimental analysis, which was the fourth part you mentioned, how do you see like AI competing with human in that? Like, as for a analyst to prepare 1 or 2 pages from that 100-page financial sheet versus a AI to prepare, what do you think like AI will capture that and human might miss, or something in a way of that? Like, what's the difference that you think like could be between the two?
So judgment is something which we can't give AI to do, or AI cannot do.
Okay.
Because there are a lot of parameters to be looked into when you have to make a judgment. And at present, AI is not ready for that. And that's where we feel the human expertise, which has a capability of looking around at all 360 degrees. Right from unstructured data that is coming, the macros, the inflation, company performance, management, sentiment, the short-term.
More of an emotional value. I think is re- researching or analyzing that is missing from AI. Do you think on the lines of that? Okay.
Yes. So one cannot just say, okay, if AI is saying buy, it should be a buy. A human analysis is required to get into that judgment. So I will say like this: AI is a good co-pilot to make your work very productive and making it easy. But it will be very hazardous and dangerous when you put AI in a co-pilot, autopilot mode.
Yeah.
And at this date, it's not ready, especially for capital markets, where a lot of sentimental analysis is also done, a lot of financial analysis, and all this is also connected with macros, unstructured data, and I would say uncertain government policies as well.
That's for me, I think referring to the large unstructured, be it unstructured data set or structured or large data set or small, I believe when it comes to summarizing the numbers and crunching the numbers, I believe AI will outperform a human in that way, I think. But when it comes to researching more or the latest updates on the government policies or the emotional understanding with a company while making a decision on buy or sell, or making a evaluation with them, or human relation can't be evaluated by AI.
Yes.
So in that way, but you see what do you see a lot of people right now currently over dependent on AI, be it in different way, not primarily restricted to the financial market, but in terms of for everyday office work, I see a lot of people are now over dependent on AI. Do you see the same in a way?
Yes, in a way, when you see when you want to do your time management, when you want to be productive in your work, when you want to make your work a little faster with some help with AI, it helps you a lot. But particularly when it comes to numbers, and to make a judgment and a decision, human expertise is required.
Sejal, today there's so much information out there. I mean, there's so much information out there. So how do you see AI, leveraging AI in filtering market signals from the noise?
So I would say we follow a methodology. And considering there is lot of unstructured data, lot of data sets available itself, which can also make people confused as in what to consider and what not to consider. So considering that, how we differentiate ourselves is by adapting 4-factor methodology, which helps us to again move ahead with the help of AI. So firstly, we look into the historical performance of a company. So what we'll see is, with the help of AI, we have a data collection of historical data of a company, which again helps us to get that data in. Then we look into the future performance of a company and we do the forecast.
Okay.
So
on
here,
what factors?
Yeah, so here we will look into the product and market analysis. We will do the growth of the revenue. How is the earnings of the company coming in? There are some key valuations that we will look into.
Okay.
Which helps us again to understand, and the market drivers. And the demand drivers of that particular sector.
What are demand drivers?
So, for example, today when we see solar panels, for example, there has been a lot of talk about, renewable energy, the scope of it. And we see currently probably they may not be in that place. But considering its use cases and seeing its advancement, we may forecast the future of that solar energy, renewable energy, or that sector.
Yeah.
So that is something that helps us to understand based on the future performance how we are going to assist.
Okay.
Right? Now, consider after these two, we look into the relative valuations. Now, when we talk about relative valuation, we look into the AI-based intrinsic valuation model,
Okay.
which again combines with a relative valuation that is done by the human expertise or our analysts,
Okay.
which helps you to make a decision.
Yeah.
Now, on top of it, we will also do risk assessment based on AI.
Yeah.
Now, these risk assessments are based on new data sets like quality of management, ESG, sentiment, and also the demand drivers, as in how it's going to perform next. So all these things bring out together in a concise form, which helps us to make an AI model for us.
Yeah.
And currently we have around 14 proprietary AI models,
Okay.
which helps us to bring out a purchase price index for every stock of we cover.
Oh, okay. A lot of times we see investment sentiments move the market as much as fundamentals do, like the fundamentals, the numbers do. So, how do you see leveraging AI in finding out the real indicators that are moving the sentiment of the market, of the investors?
So, what we do is when we are focusing on any stock or we are seeing such of the market sentiments, we first do the fundamental analysis of a company where we look into financial statement analysis, we'll do ratio analysis, we'll see the growth and earnings of the company. We'll also see the mood and the guidance what the company is giving. On top of it, we provide AI to just understand, how the sentiments are working based on the investor calls that has happened, the sentiment that is created based on the investor calls, and how the market is reacting while the investor call is going on.
Yeah.
And on top of it, we again put an AI to do a little bit of technical analysis just to understand where has the market overbought or oversold.
Okay.
So this actually helps us to understand the greed and fear in the market. And that's where we see some dislocation in the market, and based on that, we advise our clients to invest.
Oh, okay. So, yeah, makes sense. Over here, how do you quantify the sentiment, like quantifying them on basis of the AI? Is that the solution, or you're having a human intervention to it as well?
Yes, so final decision is of a human intervention. As I said previously, current state of AI in finance or capital markets, we can't put judgment or decision making on AI. We have to have an inhuman intervention to advise our investors as in what to invest in.
Okay.
So at present, I see AI is not a complete solution for decision making and judgment.
To add to it, how do you see the future of finance going to be with the AI developing up now? What's the future is going to be like in financial sector down 10 years line? How do you see it? What changes do you expect? Or
So it is certainly going to be there. It's not that we don't foresee that a human or AI will not be able to do a human work, a human decision making.
Yeah.
It will still take some time.
Yeah.
But in the current scenario, I don't see that. But future, as and when it advances, we can see, because we have seen AI evolving since 2016 or probably earlier than that. We have seen how we have pivoted to AI from manual work to automation to decision making or the sentiment analysis.
Yeah.
So it may be there, but I think it will still take some time to be there.
In this long journey, there has been so much changes, like you're saying. Like now you see there are a lot of cutting edge tools which were earlier reserved for the institutions are now available to the not common people, I would say, but like the people in this segment. It's available. So
the retail investors.
Yes, retail investors. So what change could that bring now? With a retail investor powered with a tool that was for institutions handling large amount of money.
So when we see in Crisp Idea, so we have two verticals here. We cater B2B with institutional clients, and we cater B2C with retail investors.
Yeah.
So we see a lot of opportunities here where we are trying to bring that institutional research capabilities and providing it to our retail investors. And this is more or less because of the AI. The work has become easier, it's becoming faster. So 10 of hundreds of pages are converting into 1 or 2 pages or so. So there is a lot of change that has come, and it is helping us and our clients in the retail space to get over the whatever uncertainties which we're not able to see previously is being able to be seen. We can do market analysis, we can do a lot more of sentiment analysis as well as the forecast, and help our retail investors to grow their investments.
And basically making an informed decision.
Yes. Yes. A lot of it is democratized right now. See, these days you see Zerodha, Robinhood, they have democratized the brokerage.
True. Yeah.
Right? If you see them, it's a trading platform now. Everyone goes. Yeah. So similarly, we have democratized our research.
Yeah.
Right? So we have brought in AI, we have brought a lot of tools and got those data sets in, made a research platform, and which also helps to cater our investors, the retail investors, to use that as well. So yeah, it's basically a good opportunity here to still further leverage.
Yeah, makes sense. But just to just a thing came to my mind when you said Robinhood. Just asking you, like, that platform was like somewhat, what happened with that Reddit meme coin or something, like it got famous and then Robinhood shut their servers, so nobody traded for like 4 hours or something like that, and then the stock price fell.
I don't think so. It may be a long time back because
it's COVID time.
Yeah.
It was like the Wall Street versus the, what was that, GameStop was that. Yeah. Yes. So yeah, like
it is GameStop.
Yes,
not
GameStop. Robinhood was the app on which like the trading stopped. Like GameStop was that stock. Yeah.
But currently they have done very well.
But like if they can do something like that, don't you think like that's a red flag to be on?
Yes, that's right. So that's why you can't rely completely on AI because it can be trained in a negative manner. Yes.
Yeah.
You have to be cautious. You're going to when we are providing any research advisory or any kind of advisory to any client, it's their hard-earned money. There's an emotional attachment to it. We can't play around with that, right? So whatever we have to do has to be very, very cautious and make sure that people are what they are earning and they are investing.
True.
Value and growth has to happen there.
True. But like I see, life has become so random that Trump coin came in one day, he made somewhat $50 billion, and like in that way, like it's random. So you can't have a AI thing control that, I believe. Like because of AI only, I guess it's becoming so random, everything. Like I believe it's promoting the randomness in the environment in a way.
So if you're saying about crypto, then yes, it is something that we don't advise to invest in, first of all.
Why?
See, it is a very manipulative asset that is going on right now, right? It has moved from, like, recently it went 102.
Yeah.
Again, it came down 91 again.
I guess that's because of the policy changes happening.
There is no certainty in it, right?
In a way, you could say.
And
That's-
I don't think currently it is going to be a safe investment, because it can bring out the next recession also. The kind of markets are going on, if a crash happens, people are going to lose their money.
in a way, like that's for same for stock as well. Like, and yeah, I could say it. Like, I'm not a supporter of crypto. I don't know nothing much, but just a question again. Is it?
I don't know. It's people have lost lot of money in crypto 2 years back, and that's where we saw a longer frozen winter in stock market, because they lost their money. There was zero liquidity was completely affected, and then again the stock market picked up, and simultaneously now today we see crypto back.
So see, you were saying like crypto is backed by stock, not in a way like.
Not that people got their money back actually over a period of 2 years that they lost because of the investment.
So, given the current market shifts happening, like what sectors do you see outperforming in the coming 12 to 18 months?
So, in next 12 months, or considering the 2025 and probably a half of 26, we see technology,
Yeah.
financials, and industrials to be performing very well.
Okay.
And we are underweight on utilities, staples, and energy.
Are there any under the radar investments trends that our audience should know about?
So, basically, equities are the best friends of all the investments,
Okay.
and they have been liked by everyone. But I would say it's not meant for everyone, because whenever an investment has to be made, it has to be based on the risk profile of a person.
Of that. Yeah.
Right. So since COVID time, both in US and India, stock market has done very well. But on a short-term basis, we see some shortcomings like slow growth,
Yeah.
uncertain government policies coming in. There is inflation again,
Yeah.
which is rolling out, and also a lot of focus on deficit positioning by the governments. So these are some of the shortcomings we see.
What's deficit positioning? Could you like?
It's basically focusing people. The government is looking a lot into fiscal deficits to be maintained and all
Okay.
at a very high
Oh.
level than what it is going on. So considering all that, a person's risk profile has to be analyzed before investing. So we advise our clients and investors to diversify in all assets. And we also advise them to invest a part of it in precious metals, just to hedge against that uncertainty and slow growth and the shortcomings that are coming.
So yeah. So thank you so much, Sejal, for joining us today for this conversation.
Thank you for having me, and it was a pleasure talking to you, and look forward to a few more conversations.
Thank you so much, Sejal. And thank you so much, guys, for watching this video, and we'll see you again soon. Thank you so much for joining at Cup Shop with Kabir at Clear Trust.